Hello to our esteemed viewers on our channel. Today we will be discussing the warning by former European Central Bank President Mario Draghi of an economic collapse of the European Union. The European Union is in dire need of implementing several measures, most notably achieving deeper cooperation in industrial policy among member states, making decisions more quickly, and securing massive investments to boost the economic bloc's growth. These steps were mentioned by Mario Draghi, the former president of the European Central Bank and former Italian Prime Minister, according to a report published by Reuters, in a detailed memo that outlines what the European bloc needs to do if it wants to keep up with its main competitors, the United States and China, economically. Draghi said in a press conference in Brussels that the current situation is really worrying. He added, "Growth has been slow in Europe for a long time, but we ignored it. Now we can't ignore it anymore. Now the circumstances have changed." In the detailed memo, which is around 400 pages long, Draghi said that the European Union needs investments ranging from 750 to 800 billion euros, which is equivalent to $829 to $884 billion per year, or around 5% of the GDP. This growth rate is much higher than the 1 to 2% of GDP in the European Union's Marshall Plan to rebuild Europe after World War II. He emphasized, the European Union must move on several fronts. Draghi warned, "The matter is to do this or else we will suffer a slow death." Draghi said in the memo that European Union countries have already responded to the new reality and are seeking to change it, but he added that their effectiveness is limited due to a lack of coordination. The different levels of support between countries have been annoying the single market, and the political fragmentation has limited the scope required to compete globally, and the decision-making process in the European Union is complex and slow. The report suggested that the so-called qualified majority voting should be expanded to include more areas, and as a last resort, allow countries with similar thinking to move forward on some projects on their own. While existing national or European Union funding sources will cover some of the massive investment amounts required, Draghi said that new sources of joint funding, which countries led by Germany have been hesitant to approve in the past, may be needed. German Finance Minister Christian Lindner said that joint borrowing will not solve the European Union's problems and that Germany, the largest economy in the 27-country bloc, will not agree to it. Analysts, according to Reuters, said that the European Union may delay implementing Draghi's proposals. Analysts at Eurasia Europe said, it is likely that political difficulties in Germany and France, and the long-standing divisions between other European Union member states, will prevent a major leap forward in integration as described by Draghi. Furthermore, recent political developments in France, despite the appointment of Michel Barnier as Prime Minister, make us more skeptical about the European Union's ability to achieve meaningful financial ambitions. Thank you for following us. Don't forget to subscribe, share, and like.